TradingSim, the #1 market replay platform in the world, where you can learn to trade like a pro at your own pace.
In today's video, we'll cover how to day trade using the VWAP indicator for aggressive day traders and conservative day traders. I know the idea of a conservative day trader is an oxymoron, but trust me, they do exist. You will learn how to enter the trade, where to place stops, and how to set your profit targets. So let's dig into how to enter a trade using the VWAP. Entry option 1 for the aggressive traders. The first option is for the more aggressive traders and would consist of watching the price action as it is approaching the VWAP, wait for a break of the VWAP, and then look at the tape action on the time and sales. You will need to identify when the selling pressure is spiking and the tape is going crazy. This, my friend, is more art than science and will require you to practice reading the tape. The goal is to identify when the selling pressure is likely to subside and then enter the trade. This approach will break most of the entry rules you hear on the web of simply buying on the test of the VWAP. The problem with this approach is you don't know if the price will breach the VWAP by 1% or 4%. But by combining a pullback to the VWAP with reading the tape and understanding order flow, you can actually come quite close to calling the turning point on a chart. Entry option 2 for the risk-averse traders. The second option is recommended for traders that are new to the VWAP indicator. Essentially, you wait for the stock to test the VWAP to the downside. Next, you'll want to look for the stock to close above the VWAP. You will then place your buy order above the high of the first candle that closed above the VWAP. While this is a more conservative approach for trade entry, it will open you up to more risk as you will likely be a few percentage points off the low. You will need to determine based on where you are in your trading journey and your appetite for risk to assess which entry option works best for you. Now that you're in a trade, where should you place your stop? Stop order option 1, aggressive trade stop. If you take the aggressive approach for trade entry, you will want to place your stop at your daily max loss or at a key level, i.e. morning gap. Again, of course, this can work, but you need to be prepared for the wild swings that can occur if you get things wrong. Stop order option 2, pullback stop. The pullback stop is simple to identify. It is the most recent low point. Therefore, after you enter the trade, if the stock begins to roll over, breaks the VWAP, and then cuts through the most recent low, odds are you have a problem. At this point, you will want to close the trade and protect your capital. Now let's talk about setting a target for your VWAP trade so you can lock in those gains. There are a few ways to determine your profit potential on each trade. Profit target option 1, selling at the daily high. This is the most popular approach for exiting a winning trade for seasoned day trading professionals. After entering the trade, you place your stop below the most recent low and then look to the high of the day to close the position. You will notice that after the morning breakouts that occur within the first 20 to 40 minutes of the market opening, the next round of breakouts often fails. This is because the seasoned traders are selling their long positions to the novice day traders who buy the breakout of the high as we go beyond the first hour of trading. This gives the seasoned traders the opportunity to unload their shares to the unsuspecting public. Profit target option 2, selling at a Fibonacci extension level. This is for the more bullish investors that are looking for larger gains. This approach is based on the hypothesis that the stock will break the high of the day and run to the next Fibonacci level. This target can represent huge gains, often in the 4% to 10% realm for day trades. This, of course, means the odds of hitting this larger target is less likely, so you will need to have the right frame of mind to handle the low winning percentage that comes with this approach. Whichever profit-taking approach you use, just remember to keep it simple. The market is the one place that really smart people often struggle.
Please remember to like or share this video. To learn more about how TradingSim can help you become a profitable trader, please visit our site at tradingsim.com.